Welcome back to the Forex is Easy trading blog. There's the address for the blog there. Now, this is a continuation of the 4-hour method I'm doing on the blog at the moment. This chart here is the Aussie USD. It's not one of my favorite pairs to trade with this method, but it's one of the 8, so I persist with it if I can say anything else. Now I'll just show you, there was a loss here on one trade and I'm currently long. So I'll just show you, this is when I first placed my initial order. This is where the trend was going up here at the moment. And I was looking for a place to put a sell order in place. Now, as you can see, the market's going up, new highs. So I'll just bring up my fourth yellow line. I wasn't actually in a trade here, but I just sort of back trade to find a place for a new entry. And see how the market's come down here and gone back into the yellow lines. I'll just move my blue line up to that low there. That's where I placed my initial sell order. The initial order was at 8517, 0.8517, which is this level here. Market kept on heading up. New high there. Another new high. New high. New high just there. See the price has come down and gone back up into the yellow lines. I then moved up my sell order to that level there on that low, which was at 0.8555. Now market went up, kept on going up, new high there. Eventually fell down through that blue line, which gave me my sell order at that level there. So what happens then is the top yellow line comes down to the low of the candle that gave me my sell entry. The blue line stays there. The red line, which is my stop and reverse, goes there. Because there's no new lows as such, I put these other yellow lines out of the way, so it just makes it easy to look at the chart. So we're short at this level, our SAR's at that level, stop and reverse, which is 0.8677, which is a 122 pip gap risk between these two lines. So then we had another new low. Then the market just turned up and headed up. And there was nothing I could do. There's no way I could reduce my risk. Where it's gone through the SAR level again on the spike high just before the end of the week. Now, what happens is my trades reverse to a long at that level there. So what happens is my yellow lines, I'll just move these yellow lines out of the way because it gets a bit tight. Now the bottom yellow line, which is this one here, gets moved up to the high. The red gets moved down here. And my point of entry is on that line there, across that high there. So I'll just move this other yellow line out of the way. So now we've got a SAR at 0.8534, and there's a risk between this red line and that blue line of 143 pips. So the worst thing that could happen to me is the price would roll over again early in the week and come back down through my SAR. At the moment I'm long at this level, price is closed below that, so I'm down about 50 pips or something at this stage for the end of the week. All these just piddly little highs are just not working for me, but hopefully the Aussie might take off again and go up where I can move the SAR up. So that's it for the Aussie. So there's been 2 trades, one's completed, that was the initial short from this level here. Didn't go very low at all, certainly didn't go anywhere near my 200 pip target, and we reversed, losing 122 pips, so we're now currently long with a risk of 143 pips. As I said, the Aussie's probably not my favourite pair to trade with this method. It rarely hits the 200 pips, but what it does, or what it can do a lot of the times, is I can reduce my risk pretty quickly on it. And there's a lot of trades that end up plus 50, plus 60, plus 30, plus 40 sort of levels, and normally my losses are contained too. So even though it's not a big move of the Aussie, you can still trade with this method, and it just makes up the basket of 8 pairs. Okay, that's it for the Aussie. I'll now have a quick look at probably the Euro Japan, which is a trade I'm in at the moment. Come close to the target. Thank you.